It's Saturday night, and along with some booze, it's time to say bottoms up to all that went down in the world of corporates and startups in this week's Companynama. I'm Ajay, and let's begin our first segment, that is on the big corporates. Our first news is on a corporate Goliath, and speaking of Goliaths, Vedanta Group, which is a giant in the mining industry, is looking to raise $1 billion from credit funds to make payments of about $3 billion. As we all know that Vedanta was piled up with a lot of debt, so to pay some of its debt, the company had to raise money. But the mining conglomerate has approached credit funds and not banks to raise all this money. The Economic Times had published earlier this week that Vedanta had to approach these funds because banks have sought for a 300 basis points lending rate hike, which was higher than what Vedanta had expected. Not only that, the government had opposed Vedanta Group company Hindustan Zinc's move to buy THL Zinc Ventures for $2.98 billion, which is another reason for the fundraise. Here are the names of the credit funds that Vedanta is in talks with to raise capital: Farallon Capital, Davidson Kepner, and Ares SSG Capital. From a mining giant, we go to a software giant, Tech Mahindra, which has hired a new MD and CEO. Let's see who it is. The new CEO and Managing Director appointed by Tech Mahindra for the next 5 years is Mohit Joshi. If you don't know who that is, then here are the details. Mohit Joshi is currently in charge of Infosys' software division. This includes AI automation portfolio and the banking platform Finacle. He'll be taking over the reins from CP Gurnani, the current MD and CEO, after his retirement at the end of the year. Here is how the stock market reacted after the new announcement. Tech Mahindra share saw an upswing of 9% on the BSE intraday trade on Monday to 1,159.95 rupees. And Hyundai India will be expanding its production capacity, that is, if they could pull off the acquisition of General Motors India's plant in Talegaon in Maharashtra. For this potential acquisition, Hyundai had already signed a pact. And if things fall in place, the South Korean automaker would be doubling up its production capacity. It's been about 3 years since General Motors stopped its production at the Talegaon plant. The plant was established way back in 2008 and has the capacity to produce 1.3 million cars and 1.6 million engines per year. Hyundai currently operates 2 facilities near Chennai and is capable of manufacturing approximately 8,24,000 units annually. Reliance Jio is making its next big move in the telecom industry by launching a new set of postpaid family plans starting at 399 rupees. If you are a family of 4, you can try out these services free of cost for a month. Some of the features under the 399 rupee plans includes 3 additional add-on connections for the family and 75 GB data at 99 rupees per SIM. The total monthly charge for a family of 4 would be 699 rupees. The plan also entails 100 GB data and up to 3 add-on connections at 99 rupees per SIM. An American private equity fund, Blackstone, has sold its remaining 20.5% stake in Sona BLW Precision Forgings to a clutch of investors. The deal has fetched them 4,917 crore rupees. It was only a year ago in August that Blackstone had sold 79.4 million shares or 13.6% stake in the company for 4,044 crore rupees. To give you a more detailed perspective, let's look at the numbers. The average price at which Sona BLW was sold was at 410 rupees on the BSE. This, of course, is after a discount of 6% from the previous closing price of 436 rupees. Last Monday, the Sona BLW stock, which declined 34% last year, ended 6.9% lower at 406 rupees. An American tower corp, ATC, might be selling its equity stake in its India operations to one or more private investors. This, they say, is because of the challenging business environment in the country. The Economic Times reported that the US-based company, in a recent filing with US Securities Exchange Commission, said, and I quote, "It is looking to sell stake in the venture as part of cutting exposure in India." This news comes as Vodafone Idea, which is one of its largest customers in India, had said that it won't be able to make payments in full to ATC. The American company recently took $411 million impairment charge due to Vodafone's partial payments. And from corporates, we move on to our next segment, On the Radar, which deals with companies that are embroiled with controversies and disputes. The first company that is on the radar is Patanjali Foods, which is quite confident that the recent action taken against company's promoters will not affect their business. On Wednesday, stock markets had frozen shares of promoters and promoter entities of Patanjali Foods, which is a subsidiary of Patanjali Ayurved. This is due to the failure on part of the promoters and their group of not meeting the minimum public shareholding norm. Overall, a total of 292 million equity shares have been frozen by the stock exchanges, and Patanjali Ayurved is among the 21 promoter and promoter group entities against whom the action has been taken. And State Bank of India has filed an insolvency plea against engineering, procurement and construction company Simplex for its dues. The company owes 9,600 crore rupees to lenders led by Punjab National Bank. This is one of the biggest accounts taken to NCLT in the recent times. The company owes PNB 1,600 crore rupees, followed by SBI at 1,500 crore rupees and Indian Bank at 1,400 crore rupees. There are over 24 lenders to whom Simplex owes money. And the Supreme Court has agreed to hear Torrent's plea against the National Company Law Appellate Tribunal NCLAT order, allowing second round of auctions for the Committee of Creditors of Reliance Capital for the sale of company assets on March 20. Last week, NCLAT allowed the lenders of Reliance Capital to hold a second round of auction for the sale of the company. Torrent Group moved the Supreme Court seeking stay of the NCLAT decision. It claimed, quote-unquote, irreversible harm if second round of auctions is allowed for Reliance Capital, which is undergoing insolvency proceedings. And India's largest gas firm, GAIL, has won a nod of the country's bankruptcy court to acquire insolvent private sector chemical company JBF Petrochemicals for 2,079 crore rupees. GAIL has said that the Ahmedabad bench of the National Company Law Tribunal has approved the resolution plan it had submitted after JBF was auctioned by lenders to recover unpaid dues. GAIL had outbid a consortium of Indian Oil Corporation and Oil and Natural Gas Corporation in the insolvency process run by IDBI Bank to recover 5,628 crore rupees of dues to financial and operational creditors. The Income Tax Department has sent a tax demand notice of 549 crore rupees to Amazon Web Services AWS, a report by the Economic Times has said. This is based on the findings that the tech major was imposing a fee for offering its cloud services to Indian companies. This fee is taxable in India, but AWS reportedly evaded the tax. The Income Tax Department has said that the receipts from cloud computing services were in the nature of royalty fees for technical services. The tax department has reportedly raised the demand for 190.85 crore rupees tax for 2014-15 and 358.27 crore rupees for 2016-17 financial years. The department also sent a notice to AWS in January end. The amount does not involve any penalty. And shares of Cipla touched a 52-week low of 853.5 rupees, down 2.47% on BSE in Tuesday's trading session on reports of the Income Tax Department investigating the drug maker over potential tax violations and tax avoidance. Cipla has said that no tax demand has been raised so far. The IT department had carried out a survey action against the company on January 31. The report has added that the tax department is investigating whether Cipla made wrongful claims under Section 80IA. Preliminary investigation has alleged wrong claims worth 400 crore rupees made under that section. Well, that's all the updates we have for you from the corporate world. Now, let's take a look at what went on in the world of startups this week. First up, the Abu Dhabi Investment Authority will invest $500 million in Lenskart at a valuation of $4.2 billion. The investment will give Idea a 10% stake in the eyewear company. The fundraise will be mostly through secondary sale. The parties, however, did not disclose the name of investors who have cashed out. Currently, SoftBank and Premji Invest are the largest shareholders with 19% and 10.4% respectively. It's time to shift gears to EVs. Ola Electric is recalling its S1 scooters having front suspension problems. The recall in the garb of upgrade will give an option to buyers to upgrade their scooters with new front fork amidst concerns among them regarding safety of that part. In a tweet, the company noted that there have been some concerns amongst the community around the safety of the Ola S1's front fork arm. Right then, India created more unicorns than China for the second consecutive year in 2022. According to a report in Mint quoting a Bain & Company report, non-metro startups in India received 18% of the funding share, and 9 out of 23 unicorns that emerged in 2022 were from cities outside of the top 3 metros. This indicates a move towards a more democratic funding distribution across the country. The deal value in India decreased by 33% from $38.5 billion to $25.7 billion in 2021-22, with the majority of the decline taking place in the second half of the year as macro headwinds intensified. And 2 months after admitting to fudging account books, car servicing startup Go Mechanic is in advanced talks to sell its business to used car retailing platform CarTrade for 250 crore rupees. The talks have been going on for almost 5 weeks, and the fire sale talks comes after Go Mechanic founder Amit Basin in January admitted to financial reporting errors like inflating revenues, a move that forced the company to fire around 70% of its staff. The tech-based car maintenance provider also agreed to have its accounts audited by a third party. Well, that's all for today on Companynama this week. Download the Money9 app and stay tuned to Money9 English's YouTube channel to watch Reality Check and Spendwise that's coming tomorrow on Sunday. This is me, Ajay, signing off. Take care and good night.